Okay, should be all set.
All right, what time is it? Let's give them 1 more minute.
Sure.
So Laura's not here, can join. All right, guys. So let's get started. So today we're gonna study. You can say this is a beginner's class. We're going to study chart phase, components, and patterns. So we'll start with chart phases now. Let me make sure. Okay, so chart phases. So first we have a trend. What's a trend? If the price rises over a period of time, it is called a rally, bull market, or upward trend. If the price falls continuously, it is called a bear market, a sell-off, or a downtrend. Different trends can have a different degree of intensity, and we will get there shortly. So, pretty much recognize the trend. Before opening a position, it's always important to understand, well, are we on an uptrend? Are we in a downtrend? Or are we in a consolidation? This will always help you to understand, let's say, you see something like, I don't know, Tesla that is going up and you want to play Tesla puts, well, you understand that you're going to be against the trend, okay? So you can still do it, but it's always important to know what's the most dominant trend. And again, you can have a rally or a bull market in an upward trend, or you can have a sell-off, a bear market, which is a downward trend. And yeah, they can have different degrees of intensity. So corrections. Corrections is a short price movement against the prevailing trend. During an upward trend, corrections are short-term phases in which the price falls. The price not always moves in a straight line in one direction during trend phases, but constantly move up and down in so-called price wave. So yeah, the price is not just one thing, one straight line from A to B. Best example, Monday. We're in a bull market, right? And what happened on Monday? We dropped a little bit. And people were already closing positions and asking, what are we going to do? Well, obviously, if you keep going up every day, you're not going to just keep going up. It doesn't work like that. There's correction. Not a reversal, a small correction on the price works like that. So, for example, hold on. Let's put the market here. So you guys see, that'd be a correction here. Why? We have a low here and our
Duncan, I
new
think you have
low.
to switch your screen. It's
Back to
just,
presentation.
it's just showing. Yeah. Oh yeah. If you slide over.
That's
There you go.
weird. What is it showing now?
So now you're showing the presentation. If you wanted
That's good.
to.
And before it's not showing the chart.
No, no, no. I have to go on Discord and then switch the screen.
Okay, let me see what it's showing.
There we go. That's good.
Okay. So this is SPX, okay? This is a market here. So Monday, This is what happened on Monday. This is what everybody was so worried. You see how strong we are? All these green candles always finish on a higher point, higher point, higher point. So this is a correction. It's a downtrend, but it's not. It's a price sell-off, a price sell. So price goes down, but the prevalent is the uptrend. So that's why it's called a correction. All right, let's keep doing chart faces now. So we have consolidations, and we use this word a lot, especially when the market is choppy or sideways. We see this. So consolidations are sideways faces. During a sideways phase, the price moves sideways in an usually clearly defined corridor, and there are not impulses to start a trend. I put to start a trend twice, but yeah, so a consolidation basically is when the price, as it says, it consolidates between a channel. That's what we call a channel. So when you hear somebody saying Tesla is in a channel, that means that it's bouncing between a low and a high, and it doesn't go below that low or above that high. And for us, that's very important for us at trade options because consolidations are gonna mess with the implied volatility in your contract. So it's going to affect your contract price if you, for example, you get into a breakout and the price starts to consolidate, the stock price is going to be between that channel, and that's going to affect your contract by just implied volatility. So always be aware of that. All right, now we have breakouts, and we play a lot of these breakouts. That's when we say, I like this stock above this price. That's what you're looking at. You're looking at breakout. So you're seeing a consolidation, and you want to get into the breakout. So a breakout. The buyers and sellers are in equilibrium. I think I have to mute this person. You got it? Perfect. The buyers and sellers are in equilibrium during a sideways phase. If the strength ratio between the buyers and sellers changes, so either the buyers win or the sellers win or overwhelmed during consolidations and one side of the market wins the majority, the price starts a new trend. Breakouts are the link between consolidation and new trend. So make sure you understand that. Breakouts are the link between consolidation and a new trend. And I do have a chart later that I will show you. So trend reversal. If a correction continues for a long time and if its intensity increases, a correction can also lead to a complete trend reversal and initiate a new trend, a transition in prices from one market phase to the next. So when we get into positions, we either do a breakout or a reversal. We never get into consolidation. I mean, we could, but it's not recommended. So you either want to play the reversal and start a position, and you want to play a breakout, or you want to play a breakout. So let's say, for example, this chart, this is CAT, and I'm pretty sure it's a 4-hour chart. Can you guys see the chart?
Yeah.
Okay. So what do we have here? We have an uptrend. So if you see this yellow line, that means that every low it's higher than the other low, with a few exceptions, but not a. But the trend is that lowers are high and the highs are always high. Like for example, look here. Then you have the next low is higher, then the next low is higher, next low is higher, and it continues. Same with the high. You have a high here, then the next high is higher, the other high is higher, and just like that, it makes an exception, but overall, it keeps going up. So this is an uptrend, right? The red candles here are not reversals, are only corrections. So let's say here, if the red candles will be all the way to where my arrow is, that could be a reversal. But as right now, no. Then you have this channel here where you say, okay, we find a top, and now it's between this price. It's 175.11, the 182.19. So that's what we call a consolidation. So once finally the price broke this 182.19, that you see this trend, you see how the intensity changes here? Like here, yes, it goes up, but it takes time. Like here, in a matter of days, we climb all this price. That's when that's called a breakout. So you're breaking the consolidation. That's when they say the breakout is the link between the consolidation and the new trend. You have now a new uptrend. All right, so we go on price wave now. So a price wave is the most important component available to technical traders because you can recognize the price. That's why it's so important. Without that, nothing. That's the first thing you need to learn before learning candlesticks or Fibonacci's or Elliott wave or anything. You need to understand what's a price wave. Every chart phase and every chart pattern can be clearly described using the price wave. If you don't know, if you don't understand the price wave, you are not going to be able to understand price action, price targets, uh, entries, breakouts. The price on the chart usually does not move in a straight line from point A to B. That's what we say before. We don't just go from one target to another target without any other movement. It's not like that. But always in an up and down fashion. So you see, even if if the stronger trend is an uptrend, you you're still gonna experience downfalls. So it just doesn't go from point A to B, as we say multiple times. The individual upward and the downward movement represents it. I miss a note here, the so-called price wave. Okay, so in an upward trend, the upward price wave are steeper and longer than the downward correction price wave. You see, that's an upward trend, and those are the correction. Look how the greens, which represents the upwards and the buyers, are steeper than the red ones. In a trend reversal, a shifting ratio between the upward and downward wave can be observed. In a sideways market, the upward and downward price wave are equally strong. So in a sideways market, it's a consolidation. So there's really it's sideways. That's what the word describes it. There's really not too much to see. You're like, okay, like this is very confusing right now because it's not taking a clear direction. So it just goes from this point to this point without any action. Again, another option here. That's Tesla. I think this is an hour chart. There's a small corrections here. An uptrend. This is a correction here. Maybe a small reversal, but okay, so swing points. So swing points are basically your entry and your exit. So the end of the price wave are called swing points or resistance. Swing points offer us as good supplementary aid for chart analysis. If an upward trend comes to a temporary stop, this is called a swing high or resistance. If the end of a downward movement is also called a swing low or support. Okay, so those are components on your charts, okay? Now what we're gonna do, and we did study this one, so if you attended the one of chart patterns. You can either stay for a review or you can leave. That's up to you. We're gonna study the most important and the most common chart patterns, okay? And I don't know if next class, but whenever we continue with this presentation, we will be move a little more on trend lines and wedges, okay? But right now we're gonna study head and shoulders, a study or review for the guys that were already here. I think like a month ago we did it. We're gonna do head and shoulders, ascending triangle, and a few more. So the most commons we're gonna talk about it today. So head and shoulders formation, HAS, communicates the market activity and the balance between buyers and sellers. Best thought during established trend. So now that we know what is a trend, we can look at the patterns, right? Indicates a trend reversal scenario. So we talked about reversals before, right? The price wave, we talked about wave 2. And at the left shoulder, the head confirms the structure by setting higher heights. The right shoulder is the first lower high point. The neckline connects the lows of the correction wave. Okay, this is a lot of words, so it's better to do it this way. You see? So it's a reversal. Look how from the uptrend we go to a downtrend. That's what we know as a reversal. Now that we know what's a wave, you have the first wave here from this point to this point. That's going to be your left shoulder, the height. Then you have a higher height, which is going to be your head. Then you have another correction in your right shoulder, which is going to be a lower side. It's going to be lower than your left shoulder, okay? And once it breaks that support, your pattern is complete and the reversal is happening. So now you go from an uptrend to a downtrend. So that's your head and shoulders. It's a reversal chart pattern. All right, now we have the cup and handle. So the cup and handle is a continuation. So basically, we already know what's a trend. So in an upward trend, as it says here, often preceded by an upward trend. The price falls when it forms the left half of the cup. The right half of the cup shows the initiation of an uptrend once again. When the price returns to its high, forming the left edge of the cup, there is usually not direct breakout. Instead, the price drops again for a short time and the cup handle is formed. So what does this mean? It means that you're in an uptrend and you're going to see a small correction which is going to form the handle of the cup. The handle indicates a brief correction before the upwards breakout. So that's what I just said. So you have your trend, which was an uptrend. Now we have some correction here. And instead of a breakout, you have a little correction here before the breakout. That's why it's called a cup and handle. It looks like a cup and the handle. So that's your last correction here. After this last correction, your pattern is a continuation. You see, we were on an uptrend here. We have some correction wave. Now we could even look at this like a little consolidation between all these doji candles. Remember, doji candles are long wicks and small bodies, so these are all dojis here. And then the last correction against the trend before the breakout. So this will be your entry point. Yeah, we can see his pointer. I think he's showing something. Well, I'm showing the chart, so what is to the right here, it's the entry point. Okay, so ascending triangle. Let me see. Yeah, sorry about that. You can see my pointer, but I can fix that right now. I'm gonna save next class. Ascending triangle. Trend continuation formation during, or if you guys know how to resolve the pointing issue, you can let me know. But I have no, I can just do it right now. So ascending triangle. Trend continuation formation during an upward trend. Buyers still overwhelm the sellers. Price always returns to the same high. And that's important because I see you guys pointing at triangles and you forget about this. Price always returns to the same high. Sellers do not have interest on bringing the price down to the lowest low. So yeah, we have a lower low that we can. Oh, you can share. Yeah, you're right. Okay, let me see that. So yeah, let's see screen. All right, can you see a pointer now?
Yeah.
Perfect. Okay, so let's go back then. Thank you. Thank you for that. So what I was showing you guys here is the uptrend, the first correction wave, another correction wave, and all these dodges that you can see like a small consolidation and then the last correction. And then after this point is when your pattern is complete and you have the breakout. So that's a cup and handle. Yeah, you have this cup and you have a candle on the last correction. No, thank you for letting me know. It's a bullish move, yes, because the price is going up. Uh, it's a continuation bullish move, the cup and handle. Here, you see? Proceeded by an upward trend. The initiation of an uptrend once again. So you were on an uptrend, and now once again you have a new uptrend. So it's basically a continuation. So the ascending triangle, we were here. Price always returns to the same high. Sellers do not have interest on bringing the price down to the lowest low. The most important part of the ascending triangle is that the lows show an uptrend by forming consecutive higher lows. So you're gonna see higher lows, and I'm gonna show you that in a little bit. If the sellers step out, there will be a major breakout once resistance is passed. This will be your entry point. Again, we just saw what a breakout is. So you see here, it's pretty much the same high, this high, here, almost the same high. And then the higher lows, you have a low here, you have a higher low, another higher low, just like that. So once you pass this point here, that's your breakout. And that completes your pattern. Double and triple top. These are most common formations in technical analysis. Oh, and you can also have a descending triangle. So everything that is here, it'd be the opposite. So if I say price always returns to the same high, in this case it'll be the same low. And buyers do not have interest on bringing the price up to the highest high. So it's going to be the opposite, but towards the downside. That's your descending triangle. I think somebody posted one yesterday. Double and triple top. And this also applies for double and triple bottom. Those are also patterns, but instead of doing with resistance, it'll be with support. And this is also a reversal pattern. Most common formations in technical analysis, easy to misinterpret. Price repeatedly tries to break out the last high during an upward trend. The price fails every time and it is pushed down multiple times. This translates into lack of interest by the buyers an increase of interest by the sellers. If the sellers overwhelm the buyers, a new downtrend begins. Hence, this is a reversal pattern, what we said before. If the price breaks the lowest point, the pattern is complete. So you see 1, 2, and 3. So you got a high here. First, you got an uptrend. You got a wave. You have one high that couldn't break. Second wave couldn't break, and the third. So here you also have consolidation. So you have uptrend, consolidation from 1 to 3, and then reversal downtrend. So in the next, I don't know if next class or whenever we continue with this presentation, that's what we're going to study. We're going to do the wedge. They are similar in triangles. You can use them for continuations or reversals. We see how to draw trend lines, trend line angles, and confluences. So I think key and storm now. Or if you guys have any questions with this presentation, we can start doing that now. Or Kian, you wanna do it at the end or no?
I am not teaching a subject this week. Just questions that anyone has for this week.
Okay.
Good stuff. Good job.
I have a quick question about setting stop losses on Thinkorswim.
Yeah.
Mm-hmm.
So today, well, it was one of Kindred's calls. I decided to swing it, and I know that now when you set a stop loss, it expires, like next trading day. So what I did was I set one during the after hours, but then once like 9:30 hit, it just sold at almost like $0 total.
Yeah.
So is there no way to set a stop loss at 9:30, or is it just you kind of have to wait and see where the contract's going to go for a couple minutes?
Okay, so and I know this was an alert, and I apologize for this because you were following an alert. And I would never alert a swing for a weekly. That's not your fault. That's whoever alerted that. That's his fault. Like
Gotcha.
that's something that I posted on my alert. So if you're trying to swing a weekly, you have to get ready to lose 100%. Again, I'm sorry that happened to you, and me and Kiam are not happy with that, and we're gonna do something about it. I
No, it's all
apologize
right.
for that
It's
because
part of
you were
life.
just following an alert. So what happens when you set a stop loss? Okay, so if you hit your stop loss, and actually if you don't hit your stop loss and the market closes, there's price action between after hours and pre-market, okay?
Okay.
So what is Thinkorswim doing? Thinkorswim is doing, well, his stop loss already hit. So we're gonna give him a price as close as we can. So in this case, what's your best bet? If you're swinging you have a month or two, you set your stop loss and you're most likely not going to see it unless it hits, okay? And you're gonna have that price. But for a weekly, if you decide to do this again, you wanna take the stop loss out. Because it's gonna sell you it's not gonna sell you your stop loss, it's gonna sell you for a price way below. Because
Yeah.
the price already moved. Market was closed when this happened. And it could, if the market would be open, yeah, you potentially, and you see the same movement, you can potentially see a stop loss hitting some. Hold on, sorry about that. All right, I mute him. So if the market would be open, and that also happens sometimes when the market is open. Like sometimes you set a stop loss, let's say whatever price, 1.20. So if there's a big movement between that, and the 1.20 price is already missed out, it's gonna fill you for the closest price to that 120. It could be 105, it could be 110, it could be 115, 119. But
Okay.
when the market is closed, it doesn't do that. So yeah, I'm sorry you swing a weekly. That's something that I would never do. Like
No, it's
I
all
would
right.
never
That's
like the least
part of life.
I would tell you guys to swing is at least until next Friday. Like I'm doing with SPWR. And that's why I also sold a few of those because I don't want to swing 4 or 5 contracts if I only have a little over a week. So yeah, like the best thing you can do, you can always take your stop loss after market close because that's what's gonna happen. So when you're swinging a weekly, your best bet, if it doesn't move your way, is wait and see if it's gonna go and take the loss. But yeah, like if you so let's resume this. So if you have a stop loss and the price didn't move your way, once market opens, it's gonna sell you for whatever you can get. Like it could be 90% down, it could be 50% down, but it's
Hmm.
not gonna sell it for the same price that you sell your stop loss if it goes against you.
Okay. So do you think the best bet is like if I decide to take that risk is just expect to hold it, for the first couple minutes and then just see which way it goes, like try to not sell it, right at 9:30.
You can take your stop loss out and either set a new one or try to see what it's going to do because most of the times when market opens, there's a big up and a big down.
Right. Yeah. That's what happened with it today.
Yeah, it was a
Right.
buying call, right? Yeah.
Okay.
You know, me and Kian play earnings reports like once in every 3 months, and then we already know. But obviously, if I'm hurt, if I've been losing a lot of money, I'll be like, okay, I'm not gonna mess with this. If I've been making a lot of profits, I go like, you know what, I can take that risk.
Hmm.
But yeah, like if you look what I put, like when I describe my alerts on at the beginning of 2021, I say that if you're swinging a weekly, don't expect like you can expect 100% lose. And again, don't. I know it's not your fault. I know you were following an alert, and we're not happy about it because it happened with somebody, not with me or Kian, but it happened from somebody with his team, and it's a little, yeah, we don't agree with that.
No, it's just part of learning, so now I know for next time.
It happened to me when I was new. I let a contract expire. I was on good profits, and I let it expire on a Friday. And
Yeah. Well, I
but some
appreciate
some
the feedback.
people some people learn. Like I learned all the hard way. I didn't have people helping me out.
Yeah. Well, thank you.
Yeah.
I have a question on support and resistance lines. So, in Thinkorswim, how do you draw those blue lines that are like vertical? I know how to draw like the trend lines, but
Here. Either one. Okay,
and then
so let's
also
just
like
finish
how do
with
you
his.
define them?
Let's do JR first. We're gonna get to support and resistance. So when you see here, let me do it. He says stop limit. Sell. All right. He says stop limit. No, I know what he's trying to say. So you don't want to put it at the same price, but you don't have to do a stop limit. You can do a plain stop for your price. A stop limit, you are going to have the limit price, and then you're gonna have the stop price. So you don't want it to be this, or you can do it the same, but make sure you're not gonna get stopped right away. Yeah, because the stop limit, the one that says limit is usually tells me what the current price is. So you wanna do is the STP. The order type is gonna be STD, and you put whatever stop you want. But I don't mess too much. To be honest with you, I don't mess too much with the stop limits. I just keep it easy. I just keep it with a plain stop. Plain stop, STD, and I put whatever I can afford to lose. You can do a stop limit as well. And when I'm on profits, I do sometimes straight stop limit. So I have the limit price, and I put whatever price I want to be below that. Okay. Kian, you want to show him support and resistance?
Give me 1 second. Let me sign in real quick. And then let me share
Or
my
I can show
screen.
him really quick.
There we go. Got it. You say you're okay, I got it. There we go. All right. Oh wait, I need to share my screen. Main. Okay. So all right, remind me of your question again. Just how do you make the blue
so
lines?
how you make them, and then if you could do like a super quick rundown on how do you find them too?
Yep. Give me 1 second. Let me make sure
Like today, that resistance on TLRY, that was literally perfect. I mean, it just fell. It just literally fell.
Okay, so let's do this. So when you make these blue lines, if you're on PC or whatever, it's just a right click, or I'm sorry, on the mouse, the cursor. So I would just click the middle cursor, and you see this price level tab.
Yep.
Yep. So you click that, right? And so let's say, okay, let's definitely not do 15 minutes. Let's go on the daily. So this is the daily chart of Apple. Okay. So you see how these are the high points, right? These are the high, right? So what I'm going to do is I'm literally just going to find the high. I like to do it at the wick. That's just how I trade. Some people like to do the body. I like the wick just so I can get, an extra confirmation. So let's say I found the resistance, right? So Apple's highest is at 138.79. So that's a resistance. So I'm going to double click this, right? Now what I can do is I can right click, edit properties. Okay, so now you guys see, oh, it's not popping up, huh? Oh, that's annoying. Let me do this. Change, can I do, oh, wait, screen. Okay, you can see it now, right?
Yep.
Okay, so edit properties. Here, let me do it again. So I'm going to right click the line, edit properties.
My line is red when I just.
Okay, yeah, it doesn't matter. Yeah. You can do
But it
red.
doesn't go all the way through. It just starts at the wick and goes forward. How would I make it go all the way through?
So you got to click left extension on,
Oh,
Yep. And then right extension on.
yeah, perfect.
And then what you can do, instead of, hovering over and then getting that price, right click, edit properties, where it says show price, you can either show it on the left side or right side. Okay. So right now, you see how my resistance 138.62, right? I don't need to hover over the line to get the price. Now another thing I can do is that, let's say I'm looking at, 50, 60 charts. Okay? And I can't pay attention to Apple all day. So I'm going to do this. I'm going to create an alert. So if Apple goes at or above this price, 138.79, I can create an alert, right? So this will give me an alert. If it hits 138.79, it's going to give me a notification on my phone like a text message. And it's going to give me a notification on like the left side of my screen or wherever.
Gotcha.
Mm-hmm.
Okay. So,
So,
I'm looking here.
Mm-hmm.
Oh, go ahead.
No, go ahead, please.
So I'm looking here and I drew it and it looks like it touched a little bit earlier, looking like September maybe it hit that high on
Mhm.
Apple. So then can you do the supports and show me how
Yep.
you find those as
Yep.
well?
So look at the so again, support, think of it as like you're walking on thin ice. Okay? You're walking on thin ice, and as you're walking, if you break that ice, you're going down, right? You fell through. Okay? So Apple right here, right? You see this wick? This is its support. It's bouncing off, it hit the thin ice, but we held. Okay? That's why there was a rebound. Okay? So now we have a new support here. You got to just find the lowest points on a given time frame. Okay, so this was a support, and here was a support. Right? Find the lowest points of the chart. And here's another support. Right? And we got one
Okay,
here.
so there's a ton of them.
Yeah. I mean, there's not one. I mean, you can have like, maybe only 2 or 3, but when you're trading options, you want to have all these key levels ready, right? Again, you don't want to get too messy, because you can use moving averages. Like right now, like I didn't have to make a support for Apple right now because I know that Apple is still hovering up the 21 moving average. So I know that Apple is not necessarily in a bearish trend or bullish. We're still trying to find a direction, and that's what Apple's been doing. It's been consolidating this whole time. Until I see Apple go above the 8 moving average, which then I'm going to see if I can get into a position, right? Like you guys have noticed, I haven't made it an Apple alert because it's just been consolidating, right? Apple's been, the 132 and the one, well, recently the 128 range. But you just have to find the high points. Stocks will find their historical trends, right? Whatever happened in the past is what you're going to look at at the current time, right? In September, Apple hit a high of 138.62, right? In December 29th, Apple hit almost the same price, but it rejected both times. So we know that if Apple wants to retest highs, it needs to break, or if it wants to go above all-time highs, it needs to break 138.79. Okay? But our first target is 132. Because there has been, here was a resistance, right? It broke, okay? And then we tested a high. It rejected, right? So this level, this level here was our new support. It couldn't hold, right? So the thin ice broke. This became our new support, right? So if I'm feeling bullish on Apple, I first want to see Apple go above 132.72. I'm not going to get a call at 130. I'm not going to get a call at 131 because it's just going to be consolidating. Now I do have a 130 call for January 2022, but I mean I got way too much time on that. I don't need to worry about it. But if you enter an Apple 135 call for this Friday, or a 134 or 133, and Apple has been trading in this range, well, theta is just eating up your contract because Apple is consolidating and Apple cannot break the resistance. And I can't, and if you're in puts, you're not even making money on your puts, right? If you have a weekly
Right.
contract because it hasn't broke support. Um,
So
mhm,
at that last support, so can you go back like 6 candles maybe? Okay, yep.
right
Okay.
here. Uh huh.
So it hit that support. Now so the go up one support line.
One support line over here. These ones right here.
Sorry, upwards. Yeah, right there. So it
Mhm.
broke that, and
Yep.
now it's going down, down, and it hits the next support.
Right.
Now, does that support line that we just came from become its new resistance?
This is gonna still be your new support.
So now
But the
above
one
it, that's the
here,
new resistance?
the one here is gonna be your new resistance, right? So I'm gonna have a resistance
Okay.
here. That's how I got this one because it broke this at the time. It broke this support. So that's gonna be my new resistance here. You see what I mean?
Gotcha. Yep,
Mm-hmm.
that makes 100% sense. And then right there at that green candle, it hit off the resistance and came back down because it's
Yep.
consolidating.
Exactly.
Okay, perfect. Thank you so
Of
much.
course, no worries.
This is like so amazing to actually understand what I'm looking at, you
It's like
know?
Picasso. It's like drawing the Mona Lisa.
Hey, Keon,
Yeah.
off this chart,
Uh huh.
what would be the ideal daily, I mean, time frame to do support and resistance?
I like to do either daily, 4 week, or 4 week, weekly, 4 hour. These are my time frames. I like. I don't ignore the 5 year 1 day. 1 year 1 day, 3 year weekly, 4 hour, 180 day. Those are the ones that are my favorite. Oops. Let me know if you want to repeat that.
Now I wrote it down. Appreciate it.
Yeah, of course.
Another question.
Mm-hmm.
So, y'all say y'all don't really swing weeklies because of the theta. The
Mm-hmm.
theta will eat up the contract.
Mm-hmm.
Okay.
Yeah. Well, okay. Now, there's a difference between weeklies of Tesla and there's a weekly of Apple, right? Tesla makes 50-point swings, 40-point swings, 30-point swings, even 10-point swings, right? So, but Apple, I mean, at most is 2 points, maybe 1 point. And honestly, surprisingly, Apple was up 2 points today, which is a pretty significant move. Someone bought an Apple call. If it was at 128 and you got 130, you'd obviously make money. And now, if you have a 135 call, 134 call for this week, you're not making money. The theta is just, it's way out of the money. Theta is just destroying your contract. But it all depends on the stock, right? Now, again, weeklies for Tesla, weeklies for Zoom. The big movers, the ones that have an expected move of, let's just say 10, points or more. Um, that's there's a huge difference. There's a huge difference. But I will never play weeklies on a stock that barely moves, right? Um, the Boeing, Apple, trying to think what else. What else does like Cat. Like Cat, me and Elkin were looking at it for a couple days, and that thing has moved $1 from last week to this week, and today it finally broke out a bit. But um, it the ones that make big moves you can play weeklies, but you're still gonna try to find a closer strike price.
I'd actually close at negative 195.
Cat did?
So thank God we didn't.
Shit, well, I think went to one. Really? Oh, shit. Yeah, you're right. 200, bro. Would you mind recapping the relationship between the 8 and 21 EMA? If 8 crosses the 21. Yep. The more volatile, the more expensive. Exactly. Um, yes. If the 8 crosses the 21, it is more bullish. If the 21 crosses the 8, is bearish. If you're trading above the 8 moving average, the stock is still in a bullish formation. It is still in a bullish pattern, right? Now, we break the 20 or we break the 8, we're going to get a little tactical, right? We're not going to get freaked out. We're not going to sell our positions if you have time. We're going to get a little more strategic, okay? Because if we're still holding above the 21, that is okay as far as, let's say you have a stock or whatever, long-term stock or even short-term position, we're okay. Now, there's a difference between, options and stock because let's say you have CAT, right? CAT is still above the 8 moving average, okay? If you have stock, if CAT goes to 186 range, okay, you're fine. First of all, it's stock, you have no risk. But if you have options, and CAT drops to 186, and let's say you have 20 days left in your expiration, well, that's a problem. But 8 and 21 moving averages is something that you should 100% use on the SPX, right? Because we hear a lot about the market correction. We're selling, we're selling off. The market is in turmoil, whatever, right? But let's settle down and let's check the moving average on the SPX. Okay, so SPX is still riding above the 8 moving average. These little corrections, these little sell-offs are fine, right? I will never be worried until we get to the 21. The 21 doesn't mean I'm going to start selling my stocks, right? Even my long term. I'm not going to, go crazy and say, okay, I think it's time to, bring in more cash and, let's wait till we can get a nicer, bullish trend, right? Now, if we break the 21, well, then we're going to get a little more nervous, okay? But as you can see, SPX, we broke the 8, but we kept testing the 21. That's a confirmation that we're still bullish. We're still fine. There's no reason to be, to panic. So that is why, again, you can play the short-term puts, with these, sell-offs that happen, but as a long-term trader, you shouldn't be worried. You get these news and articles. There's going to be a 25% correction. There's going to be a sell-off tomorrow. There's going to be this and that. I could literally care less, right? I could even care less if I'm on my futures, um, the link or whatever, and it's down 200 points. Who cares, right? As long as the SPX is still riding above the 8 and 21, I'm good. There's nothing to worry about. Then obviously, if we get anywhere near here, that's a long shot. I don't even think we're going to get there until the Feds, raise the interest rates. But let's not even talk about that right now. But, as a whole, we're riding above the 8. We're riding above the 21. We're still in an uptrend. There's nothing to worry about. We are still bullish.
Hello.
Yep.
I have a question.
Sure.
So, you guys talked about support and resistance, and I definitely understand that. But when we get into entries, right? So let's say, what's your confirmation for an entry? Because price can go to a resistance and it can slightly reject, and then you can get in a sell position, right? And then it will go right through the resistance. So what is the confirmation that you look for before you actually get into a trade?
So I know Elkin. Elkin, you go like what, 20 cents above the resistance point
Well, it depends on what price.
on the
It
yeah.
depends on the stock price. I always tell you guys, don't look at numbers, look at percentage. So you want to be about, if it's a stock over $100, you want to do you can only do a few cents. Also look at the candles too. Like, it's not only about the price. If you see a candle, it's closing above that resistance, and the following candle is opening above, that's a good sign. So you always want to make sure that your candles are closing above or below those prices.
Yeah. Like we
If I
want.
only see wicks, that's not. I don't care about wicks.
Yeah, when again for like scalping, just because it passes that resistance doesn't mean we're going to enter right away. We want a confirmation, right? We want that next candle to close on the shorter time frame. But let's say I'm entering, like net, right? When we entered, the price of going above that first resistance is not that big of a deal, because we have over a month. But for scalping, it's a lot more important. To make sure that next candle closes above that resistance, not that the price, closed above that resistance in the first 5 seconds, 10 seconds, and next thing you know, it got rejected. So we always look for confirmation. Sometimes, people will say, "Oh, Peloton, went above, let's say 69, right?" But and that made them go into calls, but it didn't confirm, right? There was no confirmation. It didn't hold. That candle did not hold above 169 at the time. If you wanted to scalp it, but yeah.
So when you go into your trades, your options. So let's say I wanted to go into my own. I promise I'm not. I promise I'm not. But what? How are you finding the good, like in a sense, the good contracts? So the good expirations with the good theta and the good delta and the good, like the good premiums.
So you just
So
answered it.
yeah, like say you found a good stock already that you want, you want to get into, but how do you find like the best contract to buy, I guess, because there's hundreds, obviously.
Okay, so when I go into contracts, right, and again, it all depends on your account size. But let's say I have a good account size. What I'm looking for is how much time I can afford. Okay, I will find a contract that has a lot of time and it's at a great price, right? I want time, I want a high delta, and I want a low theta. Okay, so time on your contract will have a low theta, and I want strikes not too far away from the underlying. Okay, I don't want to, like again, Apple is a good example, right? If I want to trade Apple, okay, I will like let's say tomorrow. Okay, let's just say Apple is in a bullish trend. Okay, and Apple is looking good to swing. A reasonable contract that I would get. I mean, even wow, Apple's contracts are pretty expensive. Um, but look, delta of 0.43, which I like, right? So any contract above a zero point 0.4 delta is good, is really good. Theta, super low. IV is very low, which is great. This is a contract I could get. This 135 call. Only if Apple looks good, during the market. If Apple is just not moving, this thing is going to start losing value quickly. Not quickly, but it's not gonna. You're not gonna be gaining, right? But I would always want it to be as close as possible to the underlying price. So a delta above 40, if you can. This is again if you can afford it. Now, small accounts is going to be tough, right? It's going to be tough because good contracts are not cheap. Now, if you're playing a stock like MU, a stock that barely moves, I mean, an in the money play is 425 for February. So let's say you want to do like a January 22nd, a whole week out, right? An in the money play is 1 point. I mean, these are great contracts. MU is a good contract to play, for example, but MU doesn't move much. MU, look, today they only move up 45 cents. And the only reason why MU moved the last time is because they had earnings. That's it. And this is just an earnings run up. This is all earnings run up. But other than that, MU barely moves. So that's why I like to have a lot of time on my contracts, especially for these kind of stocks. Of delta above 40, low theta, and an IV preferably 30 to 70%. I mean 70% still kind of.
That
So
that explained it all perfectly. Just one question, and you probably answered this before, so you can just throw me away. But can you explain how the IV affects the price of the contract?
yep. So you see IV on. So let's go to Tesla, right?
It's implied volatility, if I'm correct.
Yep.
Okay.
So IV. Uh, so IV increases when there's like an announcement coming up with the stock or there's earnings, right? So as you get closer to a certain event or earnings, the IV increases. So it's going to start moving your contracts a little faster, right? Like some people would say, hey, GME, I bought a put, but I'm not making money. Well, the IV is it's not the right spot, right? So that's why when we say, IV crush is, let's say someone holds that premium the next day, right? The event is over. The earnings are over. So the IV completely disappears, right? So it's not going to move it's dead, right? As you get as you get closer to the earnings or an announcement of a stock, your IV increases, making your contract move. Okay? So you don't want too high of IV, you don't want too little IV. Right? You want it kind of, in the middle. Again, for me it's like 35, 35 to 70.
Gotcha. Okay,
Mhm.
that makes perfect sense. So more IV percent means more volatility in the premium.
Yep. Yep.
Okay. Well, that's perfect. Thank you so much for
Of
all your help.
course. Someone press F5 on the whole stock market. Any more questions for Elkin or I or whoever?
Jay, if you're trying to talk, we can't hear you.
Oh, sorry. Didn't realize I was unmuted.
You're good.
Okay, seems like everyone has become a professional trader. I think we can finish it here. All right, quiz tomorrow, pop quiz, 25 questions, multiple choice on Blackboard. Um, hope you guys study tonight. We'll see you in class tomorrow. Just kidding. Let's make some money tomorrow. All right. Elkin, anything you have to say? Borax, anything? Always buy the dip.
I'm
Exactly.
good here.
Buy the dick.
Bye. All right. All right, guys. Enjoy the rest of your night. Let's make some money tomorrow.
See you guys tomorrow.
See ya.